I think what's very interesting is that retailers reported of the 6 to 8% average top line increase they saw last year, only about 2/3 of it hit the bottom line due to outpacing costs, which is what you're seeing in recent earnings. What's making matters worse for this year is that cost increases from things like labor, wages, utilities, rent are only going to persist and grow. And so these same retailers are predicting that only half of revenue achieved will flow through down to profits. And given inflation fatigue, many of them have run out of pricing runway. If they make price increases, they are severely risking impacting volumes, which will only degrade revenue and margins further. So the way forward is primarily to stabilize and return to baseline, stabilize and in order to return to baseline earnings, this is going to mean a lot of operational and financial efficiency through efforts like footprint optimization, which may mean closing less productive stores. That's what Best Buy and Nordstrom are planning to do, ensuring that marketing costs and sales dollars are spent wisely and drive ROI, and in general, just finding cost efficiencies in order to boost back earnings, which will then have an impact on stock price.
To what extent are we seeing a volume response to higher prices? And do you think that we have seen peak pricing?
I think that retailers will continue to squeeze where they can just because of this massive impact to their bottom line. However, if you look at some of the numbers coming out of the US, January US CPI remained consistent with December at about 6.4%, even though inflation or cost is easing compared to some of the highs we saw in 2022, they still haven't come down to the normal levels that we would like. The Fed is continuing to raise rates, so that might have an impact further. The labor market is experiencing slow wage growth as fewer companies are planning to pay for raises this year. So all of these sort of negative signals are creating headwinds for retailers. Consumers are incredibly fatigued. They're stretching their wallets as much as they can, buying mostly household essential goods and grocery and food items, and either postponing or deciding not to purchase some of those discretionary items. So there still seems to be that impact. And I think if retailers think that they have unlimited pricing runway, they're wrong about that. They're going to have to be very strategic and surgical about it, because then they're just going to continue to lose demand. And then that's going to have a negative long-term impact.
Which types of stores are poised to do well in the environment that you just described, whereby consumers are continuing to purchase necessities and perhaps be more price agnostic when it comes to those necessities, but less willing to purchase discretionary goods?
Yeah, I think anytime we have budget-friendly retailers, they're doing well. So your typical Walmart, Target, TJ Maxx, discounters, off-price, they're doing okay. They're actually even seeing an influx of higher income consumers returning to some of these value retailers so that they can get better deals. Grocery, you mentioned Kroger, will continue to stay healthy just because that's where consumers are going to put their dollars towards food and household essentials. But what's actually interesting is within grocery, there are some changes observed in spending patterns. So consumers are actually purchasing more private label to stretch their budgets further. And, maybe in some areas they continue to splurge, but in general, they're being very cost conscious with how they're spending. Now, what's interesting is luxury and ultra luxury will always be insulated from macroeconomic swings. So that's pretty much a protected sector. And in essence, retailers that are able to sustain volumes, drive price increases, and pass them on due to cost increases, these are the ones that are going to see success in 23 in Q1, Q2, and beyond.
Very clear and makes sense. When it comes to consumer behavioral patterns, one of the big changes that we saw during COVID was a move to online shopping, quick delivery, and those companies that were able to pivot were able to benefit quite strongly. Now that we're several months out from essentially reopening, is that trend sticking? Are we seeing those consumer behavioral changes stick? Are people still buying online?
Yeah, I think what was very interesting was the holiday shopping period is very telling in the US about how retailers are going to do and what kind of consumer behavior we can expect. I think in 2022, we did see a return to in-store shopping. People were tired of just doing everything online. There's a lot of benefits from shopping in store. You get to touch and feel products. You get to browse a little bit better than you can through the online experience. So some of that will stick, some of that will persist. But really what they're looking for is best value and also just kind of tired of having to deal with inflation in their daily lives. So anytime retailers can offer them a less expensive alternative or find ways to pass cost efficiencies on to the consumer, I know that that will be how to create a more loyal consumer base.